All right, I can't hear anything. So if y'all talk, I probably can't hear you because I took my headphones with me to, y'all know I'm a big gym rat now. So I went to the gym. I took these headphones and I used the Bluetooth thing on them. And now I'm trying to hook them back up and I can't hear a thing. Unbelievable. And then the kids are out for teacher's work day. And so we met my mama for Chinese today, which was kind of cool. But while we were waiting on mama, we decided to go into the Food Depot and get about $300 worth of groceries, which means we got like 3 bags worth. And unbelievable, taking kids to the grocery store. That was a bad move on my part. So anyway, welcome in. All right, so we got a lot to do. The market, I mean, I don't even watch it anymore. I mean, it's just up and down. It's just so bipolar now. No rhyme or reason to it. So the E-minis down 0.32. We're down a full percent on the NASDAQ. AD kind of weak, negative 63. Looks like it's inching back up, but check it out. AD was just at the low of the day. See that little red thing there? So we're at the low of the day. So yeah, let's see where's our opening range at? Where's all that stuff at? Yeah, we opened up there and we've just been down at every, all past that, down below the cash open. We're below the 15-minute range, VWAP, hourly mid, and we touched the overnight low. So the overnight low has served as support, and we'll see if it does toward the end of the day. It's one of those things though that probably I don't see a lot of people wanting to be going into the weekend long the market. So this thing may continue to have a extended sell-off for our last 2 hours of the day. So we'll see what happens there. All right, so let's check out our volume profile and our big green monster. The NASDAQ is perfectly priced in the fair value zone. See that? Isn't it cool how the big green monster perfectly pegs the 50% line there? Big area of support. Then we notice that we have resistance, and then we're back into the resistance again. We're back into the fair value zone. Where would we go? Well, we're fairly priced, so we anticipate bumping along here for the next few days. All right, so E-minis, where's it? E-minis, if we can garner information here. The E-minis are perfectly priced. They're in their fair value zone, and we say there is a battle to be overbought or to be fair value. And we are currently in the fair value zone, which means we would anticipate hanging out in this area for some time. Yeah, so we'll see. We're at the top of our zone. So looking good. Let's look at our skew driver. If anybody needs the updated skew driver, added some stripes on it, so we should be able to get our 5.2. There we go. So about 138 to 143. We'll call it 138. Amazing that the skew driver's out this. Oh, look there. Dip. Big dip from yesterday. All right. So even on a down day, 311.22. So what does it look like? That ain't right. What did I do? What did I do? I put the negative there. 138. Now skew is 138. We know that at some point it will normalize. We just don't know when. All right, so that's our skew driver. So what do we got to do? How's the best way to manage this stuff today, Bob? Oh, Bob, oh, Bob. Well, why don't we go to our monitor tab and let's look at all of our counts and let's look at our Greekies. See how our Greeks are doing today. Take the groups off and let's just do this. So here we go. Deltas were very positive. We got a little bit of theta and very manageable negative Vega, $23,000 down on the year. Unbelievable. Wow. Holy shit. Down 770 today. All right. So what are we going to do? That's a good question. So the first thing we need to do is let's work on our individual accounts. Let's see. We got an IRA going here. So the IRA is Bobby Beth 203, I think. Yeah. So in this one, we've got a Rick trade, and we've got our bonds, and we've got our UPRO. So this is at 100%. Now, I don't think that I have enough buying power to do anything other than, well, one thing we need to do is roll out our covered calls, right? Now, when we are in a bear market, which I'm calling, we are in a bear market. So covered calls definitely a part of our strategy. We have 1,031 shares of UPRO, which allows us to sell 10 full covered calls, and we're right at 100% profit at 12.85. So we could roll that out now. So let's see where our UPRO trade is, because our calls expire today. And so I don't care how much this account's down. I really don't care, because this is a long-term account. We know that over time markets go up, and I am perfectly fine with holding that. So let's see where we're just going to increase our cash a little bit by rolling these puppies. So we'll roll our calls. Now, where we want to roll them to, we're going to roll them down to about a 30 delta. So we're going to roll them out. We're going to roll them down to 7 days to expiration, because they expire today. And we're going to go to about a 30 delta, right? So, we could go probably to be money here about 115 or 54.5, maybe. One of these tries, 55, 54.5. So let's do that. Let's roll. Create rolling order. So we're going to sell a calendar. And what I say, the 55. So you bind these back, bind the 58. We're going to sell the 55. Let's see what kind of credit we're going to go with. Yeah, $1.20. I like it. I like it a lot. So, and wasn't that the strike I was talking about? Isn't that right? If we go 55, it gives me $1. So that bring in $1,000. And depending, or am I bullish or am I bearish on the market? Well, I think we're bearish for the next week. We're at the upper range of the fair value zone. So yeah, I think this is great. Let's try this trade. So I've got a resulting buying power of 2,600 after this. That's great. This should take no more additional buying power. And we could let it work there. We're diamond, baby. And I hate it because I can't hear my little thing. It's not working at all. All right, so why don't we do this? Why don't we now go back to our groups and make sure that our covered calls are in their groups. So unallocated, there we go. Let's put those, move to group, and those go to the UPRO covered call. Now, as you recall, we had also sold a TMF covered call. We could sell 22 of those, but we only sold 1. So we still got 34 days on that. We're up $90 on it. We're not going to sell a lot of these, because that's one of our crash insurances is TMF, right? In the event we get a crash in UPRO, then this should theoretically insulate us from a catastrophic loss. That's the game. So let's see what TMF is doing today. So I don't want too many of these on. TMF is up a little bit today. So, you could say, hey, we could do a second covered call. So we've got one 34 days out. Got it right here. So we could actually go and do another. I don't want too many of them. We're just doing a little bit of theta, a little bit of this, a little bit of that. So let's sell one more. Again, I don't want too many of those. All right, so let's put it in its little group. And y'all understand why, right? Because if I limit my upside on TMF by selling all these calls, that's not good in the event of a crash. So let's see, unallocated. We got those in its place. TMF, we're going to go TMF and move to TMF covered calls. So that's probably as much as I would ever put on in there. So I've got 2,200 shares, almost 2,300 shares, and we've got 2 covered calls. I could sell 22 covered calls. Not doing that. Not doing that at all. All right, good. So that account's taken care of. We've got a second little account. It's a small Roth account. Where's it at? Groups off. So we'll go. Total on account. So that would be this little account. So I can't do any covered calls in this one because I've only got, hey, Dad's in the class. Thank you. We got 69 shares of TMF. We got 31 shares of UPRO. So nothing to do there. You know, just a small little $3,000 account. All right, then let's go to the other account, see what we got going on here. So our E-minis are doing nothing. These probably will expire, you know, our loans that are left over from our Black Swan hedge. Hadn't been putting on any more Black Swan hedges lately. Micros doing what the micros do, making money, while everything else is, you know, churning around doing absolutely nothing. Now, this is what we need to talk about. This is at 100%. Now, I'm not sure that I have enough buying power unless I close this to put on our next RIC trade. So the RIC trade that I did is on the call side. It's at 100% profit. And let's see, TMF, that's just shares. TQQQ, aha, we got 3 covered calls. That was a good move because we're at virtually 100% profit. So let's look at our TQQQs because we got Fridays are busy days where we got to roll everything out. So let's go to our Qs and see where we want to roll those to. And again, go to your chart. What do we think about our Qs? What do we think about NASDAQ? NASDAQ is where's my green lines? Dang it. NASDAQ is, you know, at the top range of fair value. So you know, where would we think it's going? Probably back down this area, right? You know, we could draw the probability cone that would look something like that. So I got no problem in this bear market with rolling those calls out another week. We've not lost on them yet. It's been really, really good. So let's go back to our TQQQ. Oh, did y'all hear that? She said, please wipe me, Mama. Oh, I'm glad Daddy's in here doing what Daddy did. Beth says, if I wasn't in class, I wouldn't wipe her. You're exactly right, Beth. I'm not qualified. I don't know exactly how to do that. All right, so we're going to roll these down. Where we're going to roll them? So we'll go to 7-day, and we always roll them to about what, 30% probability of being in the money. So I'm going to roll those down to the 33% probability of being in the money, which means we'll roll them down to the 46. So let's do that. TQQQ, right click, roll in order. Roll that to the 46. 46. See how much money that gets us. $1.45. Boom, chicka, boom, chicka, chicka, boom. Well, we don't have any buying power for options here. Come on, fill me, baby. Fill me, baby. I said, fill me, baby. Cancel replies. We letting that move. Let's see, 46, 42. Come on, fill me. There we go. So we are filled and rolled those out today. Now, here's what I got to do. Unfortunately, I don't have enough buying power to do my other SPX trade because I'll put one on again for, so we got to close that. Now, what I'll probably do, no need to close the long, right? I can just hold that long. What's the long at? It's I think jig here. We're at the 44.45 call. It's lost everything. So we could just close the short, right, to release some buying power. See what that would be. Close the order, buy it back for a nickel. I sit like that for a nickel. Place some buying power. Says 0. That should signal. And there we go. So we're out of our short call at least. And the only reason, I mean, really, if you had buying power, there's no need to close that. It's going to be a 100% winner. And I'll probably have to close it long. I don't know. We'll see. So we're out of that. We'll see how much buying power we've got now. Give that a little time to think. So TMF, we don't have any covered calls there. TQQQ, we've now rolled out for 7 days. And what else do we need to do there? Nothing. Now, I will put on another RIC trade today. And I will put the RIC trade on to the call side today. Why with the call side? Because I've got tremendous positive deltas. So with me having positive deltas going into the weekend with my core positions, it makes 0 sense to add more risk to the downside. So with the VIX, what it is, and with the swelling of options due to the increased volatility, I can sell these on the call side, get plenty of premium, neutralize my delta somewhat. And what if I get totally blown out of my RIC trade? Really doesn't matter, because I'm still going to be up money on all my other positive deltas. Is there any question about that at all? I want to make sure y'all get that. So it's virtually, is that the word I need? It's kind of a riskless trade, right? The RIC trade on the call side, because I've got enormous positive deltas in the overall count. So if I put the RIC trade on the call side, that gives me negative deltas. I still want the market to go up, even if it blows past my strikes with the RIC trade, I'm still up money. So my RIC trade is a riskless trade. Anyone disagree with me on that? Anyone got it? Of course, remember, I can't hear you. So you got to type in the chat if you disagree with me on that. So there's no reason for me with my portfolio deltas to place additional risk on the downside. I hope this makes sense to you. There's no reason for me to do a RIC trade on the put side. That's where my risk is already. So why would I put additional risk there? The best thing for me to do is to now do a RIC trade on the call side. Now, what's that going to look like? Now, I'll probably wait a minute before we do it. And let's just see. Let's build it out. So what we would do is we would build out a RIC trade for Monday, right? And we would do it on the call side. No need to put that risk to the downside. So let's see what that looks like. RIC trade to the upside. We were going to about a 5 or 6 delta. Let's start it right here, right? 6. So if we were to sell the 43.55 call, and we buy the 43.75 call, we could collect a credit of 95 cents. It's about what I'm going for, about for $1. So let us now evaluate that trade. So we'll analyze the trade in SPX. And let's see, risk profile, 1 expiration. We will hide positions. So we'll just show our, make sure that's the only trade we got on the board. Bingo. All right, so we got a single symbol, right? So this is what a call credit spread looks like. So if I go down, right, I'm gonna keep that $95 regardless of how far we go down. If we go up, right, we can, after we go here, we can have a maximum loss of $2,000 less the credit received, because the width of the strikes is 20 points wide. So that means that's 20 times 100 gives us $2,000 of risk, less the amount of money that I'm bringing in for selling the spread, which is 95. So my max risk is 1905. Now, what if we now change this to, instead of single symbol, let me do it, make sure I got portfolio beta weighted, make sure I got no more little, yeah, I got to take all these out. Hold on a second. So this is hide positions. Let me take out all these other simulated trades that I have. Just take that out so that we just got that one trade. So that's it. Portfolio beta weighted. Yeah, now here we go. So here we're going to go, and we're now going, so this should be back to our one single trade. Let's see, there it is, right? That's the only, we're hiding positions. Now we're looking at not just the SPX trade, but we're looking at our entire portfolio. So now when you go and you say, okay, let's go show all, so that you're actually showing your positions. See what I'm saying? Where I'm actually showing my positions and my simulated SPX trade. Well, what happens? Well, if the market goes up 10%, says that I have made $26,000 in a day. So let's see, P&L open, P&L day. That's incredible, huh? So basically, I have entered into a RIT trade that is riskless to me, because even if the market goes up, I still make money. Now, I don't like looking at things on SPX. As y'all know, I normally do my beta symbol here as the E-minis. Probably should do that at SPY, but let's just look at it. Now we've got all of our things, right? So now if the market goes up 5%, we've made, you know, $13,000. Let me make sure I change all these dates here too. Today is the March the 11th. Let's make sure everything's fine with my dates. Go down here, March the 10th, March 11th is today. All right, so here we go. So price slices, yeah, this looks better. So if we go up 5%, you know, we're up $2,000 on the day. If we go up 10% in the market, well, we're holding a lot of TQs and leverage products, which would give us tremendous upside profits, right? Profit per day. So even with the RIT trade, which is nothing but a credit spread on the call side, that's a riskless trade. So why would you not do it in the call side? Which is a lot better than going, oh, I'm going to put in additional risk on the downside. I don't want additional risk on the downside because I've already got a tremendously bullish portfolio. See how beautiful that is? So you want to play with the RIT trade, put a contract or two of those on, put them on the upside. Because if you're, especially if you are carrying positive deltas, it's a risk-free trade. Now, by having that trade on, it could hamper the amount of money that I make on the upside. But again, my assumption based on our charts and everything I'm doing, I think we're in a bear market. I think we've got more downside to come. And a call side RIT trade, to me, when you have otherwise positive deltas in the account, it's no brainer. No brainer. Because if this account goes up 15%, if the E-minis go up 15%, you know, we're up maybe $41,000, we're $20,000. What happens if the market goes down 20%? We're down $10,000. All right. Questions on that? Make sure I got all my stuff in here again, because I'm a little foggy after eating Chinese today. We got showing all, we got 7 series, we got portfolio beta weighted. So that's the key, right? That's why, while as long as I'm carrying these positive deltas, and as long as I can get $1 on the RIT trade on the call side, darn right, and go all the way out to the 6th delta, heck yeah, we're going to do that. And I'm probably going to have to close that. Let's see, where's that trade at? Probably going to have to close something else before I put that on. Let's see if it'll let me. So what's that trade at now? Aha, $1.10, baby. Let's see, I bet I don't have enough buying power to put it on. Buying power effect. Well, it says I do. Look at that. So we could go ahead and put on the RIT trade for Monday. That gives us a little bit of negative deltas. That'd be kind of cool to go ahead and get that filled. Fill me, baby. Fill me, baby. There we go. So let's put that back in. So this will be our RIC trade on the call side. And we will just let that other one expire. So now we've got these two are the RIC trade, the 43.55, 43.75. Let's put those in a group. Show groups. So, and that's just the fun things that, you know, that we're able to do with options. Options give us so much stuff to do. RIC trade calls. I can put that in the same thing because that other one's going to expire. So let's put that in there. Let's see, make sure we got our TQQs in. Aha, unallocated. So we're going to move that to our TQQ covered calls. I don't see it. It's off my screen. What, baby? Oh, that's good. You don't put that together. He's so good with his little Lego stuff. And we'll do the SPX. So I'm actually very proud of you putting that together.
I didn't even use the last, and I didn't even use the last page.
You didn't even use the last page of instructions? That is incredible, Joe. You are so talented. You're just like your daddy. So let's see. Where's this list? RIC trade calls. There we go. All right. Questions, comments. Remember, I can't hear you. You have to type. Anything at all? All right, guys. I think we're done for the day. So I will probably put on another RIC trade in that other account. Hold on a minute. Might as well go ahead and do that one now. So I did it in this one. What did I do in the other account? Hey, let's go ahead and put one on. That way I can, you know, relax for the rest of the day. Where's that other account? Bobby Beth. Oh, I gotta take these groups off. Bobby Beth. Got so many accounts now, I don't know what to do. All right, so let's see. Let's go to this other account. This one here. I think that's it. All right, so this one, we've rolled our UPRO. Yep, we're good there. TMF, we sold another covered call on that, which gives us a total of 2. Or wait a minute. Yeah, we got a total of 2. And SPX, we've got call side. That's going to be 100% winner. So let's see if we can put on another one. If we got the buying power. SPX. Huh. So I can do it in this account too. Like I already got it fired up. Huh? I like that. I like that, Bob. And it looks like it's going to give me the buying power to do it. Come on, baby, get filled. Nothing. Jack, squat, crap. There we go. Ta-da! So now we've got our one that will expire today, perfectly out of the money. And let's look at this. Let's see where we're at. Let's see how far out of the money we are. Make sure we got nothing to worry about for the rest of the day. It's already at 100% profit. And that's the thing. Most of these, you know, you can just let them go. It's a zero risk trade. The zero risk RIC trade to the call side when you otherwise have where's my strikes at? Did y'all see them? Strikes. Unbelievable. Zero. I closed them. Are they way up here? Where? There it is. Look. That's got a 0.14% probability of being in the money. It's got a 0 delta. Let them go, baby. There's no reason to do anything but let those expire. And then we've got the riskless trade on here, which we have risk in the trade. We don't have risk in the portfolio. Oh, when you start learning that, hey, wait a minute. You mean that I can put that on? It's kind of a hedge in the portfolio too, and it's got 0 risk. So we can blow out these strikes because my portfolio still be up money on the day, even if we do that. And the whole time I'm gonna keep selling these things as long as I'm convinced we're in the bear market, and as long as I'm carrying significant positive deltas, and as long as the volatility is high enough to make sure that I can collect that swelled premium of about $95 to up to $100, heck yeah, do it. Now remember, you got a smaller account, maybe you can't trade, this, right? And you say, well, I could do a 5 wide on this and have $500 risk. Yeah, you could do that. Or remember that you could do this in XSP as well. So let's look at building a trade in XSP. XSP is 1/10 the size of, it's the mini SPX index. So it's 1/10 the size. You could maybe build one out in this if you've got positive deltas in your account. And I would probably say do it 3 wide. So let's look at what that looks like. And it's cash settled. So you don't have to worry about taking assignment or of shares or being, exercise short shares against you, or being assigned a future. Is cash settled, and it gets 1256 tax treatment, which is 60% long-term capital gains tax and 40% ordinary income. So you can put one of these on for 3 days. So let's see what that would look like. Let's see where we could build this puppy out at. 3Y 50, sell that for 50, sell that for, let's just play with it. Where can you go? So if you went to a 12 delta, 15 delta here, so you're selling the 432 and buying the 435, right? Yeah, buying the 435 for 34-cent credit, right? So you could do that. Now you're delta wise, I mean, you're a little closer, but keep in mind, what is Rick collecting on the downside with his? He's taking $2,000 risk and he's collecting 25, 35 cents. You can collect 35 cents. Now you are closer to the money, right? You're not at a 5 delta, but you bring in $33 and your max risk is 267. Beautiful. So you got a smaller account, you still do the Rick trade. Just I would do it in XSP. A lot of people gripe about the liquidity of XSP. You and I traded it together. I've never had a problem. I mean, is it as liquid as SPY? No, not as liquid, but I like it because it's a 1256 contract. I like it because it's cash settled. You don't have to worry about, if you blow out your thing, you're going to be short shares or anything of that nature. So I would prefer XSP over SPY. Just my preference. All right, guys, great session today. The riskless trade. Y'all have a great weekend. I will see y'all Monday.